Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Well, welcome once again, Art Jarvis. How are you on? Well, you know what? The sun's already coming out, but we started off as we record this on Tuesday morning, the last day of April. Tomorrow begins May. It was a rainy morning, but the sun's coming out. The sky's clearing.
Yeah.
So how are you?
Turned out to be a beautiful day. I'm fantastic. Thanks for asking. It's as I like to say is just be happy where you are. So whether it's raining or whether it's sunshine, it's all good.
All is good. All is good when I'm sitting here with Art Jarvis and we're recording Taking Stock, episode 24, talking about what's going on in the world economy and our own economy at home and everything else. So I know when we were talking offline, you mentioned a little bit of the on the rise kind of and the up and down stuff continues to happen. But if I'm correct, the market closed up yesterday, like across the board.
Yeah. We're in the phase where myself and people in the same business we're in the process of earning our money. Let's put it that way. We talked a little bit about momentum, a couple episodes ago, and we had some fantastic momentum from basically October 27th into middle of March.
I was going to say
right in
March.
We were up probably S&P 500 was up 24% or something like that along those lines. And, then everyone started to come to that realization that we're definitely not getting 6 rate cuts. We might not get any rate cuts this year. And then, the Fed came out. So the momentum has subsided. Let's put it that way. We're in no man's land right now. Everyone's trying to figure out what's the next move. Is the next move up? Is the next move down? Are we going to get a rate cut? And the Fed's meeting tomorrow. So today's Tuesday, the April 30th. So tomorrow the Fed will meet again, today and tomorrow, and they'll make an announcement. And, the discussion has turned to, will the Fed raise rates tomorrow? So that kind of discussion back and forth and all the news stories coming out and all that has caused a lot of volatility in the markets. And so, like you said, yesterday was a great day, but we're giving up most of it today, so everyone's still trying to figure out where we're going. And
well, you know what? I haven't looked at anything. And we're at noontime on Tuesday right now. I haven't looked to see what happened since 9 a.m. bell rang, so to speak. You said we're giving it back today so far.
Yeah, we're basically down about 0.75% today. So, I mean, in the scheme of things, yeah, it's a roller coaster, right? I mean,
Chuck using his hands, up and down.
Chuck is turning Italian today too. Yeah, it's up and downs, and we talked a little bit. It's a little early. I mean, we're at the end of April, but you start to head into the summer doldrums, right?
Sure.
Especially when you come off a 24% up move. So, I always make the remark that everybody in New York heads off to the Hamptons, and they don't come back till August. Yeah. But we're just kind of we're in that we're trying to figure it out phase, and there's a lot of data out there. We're still getting, for instance, the personal consumer expenditures inflation index. Jeez, it's a mouthful. But that's basically the index that the Fed uses to figure out
I'm over here laughing. I am so glad, Art, that you're the one that has to come up with that alphabet soup and the words that go with the PCEI or the PCI or the whatever.
Yeah. The PCE
CPI.
is the short version.
There you go, PCE. But no. Don't mean to laugh at all, but like I said, I'm glad you have to remember the alphabet soup and what everything stands for. Yeah. But you know it. I mean, you've been doing it for 35 moving in toward 40 years.
Yeah.
Believe it or not, right?
Yeah.
Went fast. I haven't. And so, one of the things that just struck me, you were talking about we're moving into the summer doldrums.
Right.
And, I never really had an awareness of that at all. So so typically the market just kind of, what does it do in the summer doldrums?
Everybody goes on vacation.
You said everybody goes to Hampton.
Yeah, even New York goes, but even we, my wife's a teacher. We do a majority of our traveling in the summertime, right? So you kind of work productivity probably takes a little bit of a hit during the summer. Let's put it that way, and the volume starts to slow down and things like that. So yeah, there's a little bit. I mean, there's still a flow of information and things like that, but the volumes seem to go down, and the reaction to some things seem to be a little more muted than they were before that. So yeah, there's all kinds. And don't get me wrong, it's not an absolute. It's not 100% of the time. There's been some great summers. There's been some really bad summers, right? No. But in general, it's kind of a little bit of a lull in the action. And then everybody starts coming back in August. Kids start going back to school and all that. Then we're heading into the holidays and retail sales. It's all about those kinds of things. So things start to pick up again. But
nose to the grindstone. Everybody's getting back into that total Monday to Friday work ethic. Monday to Friday, the kids are in school.
Mm-hmm. Yeah, everybody back to work.
But so the definition of the summer doldrums is just. I thought you used a good word. You said just a little muted.
Yeah, that's a good way to look at it. Yeah.
When you just said that, I thought, okay, that is a good descriptor for me anyway, and hopefully for listeners as they hear that, they'll say, oh, okay, I get it. Yeah. And that's what I was asking for. It's like, well, what does a summer doldrums look like in a marketplace? Just everything's a little just muted.
Yeah, and in my opinion, that makes a lot of sense heading into this summer. The fact that we had such a strong move up in the last, just call it 6 months now? That's a big return in a relatively short period of time. And if interest rates aren't doing what you want them to do, and corporate earnings are just kind of hanging in there, they're not making some major kind of up move on your forward earnings, then what's the incentive to push the stock market higher?
Right.
So that's kind of where we are right now. And again, everyone's trying to figure out what the Fed's going to do, right? I mean, there's literally people saying tomorrow, Wednesday, that the Fed's going to lower rates a quarter. And then there's also people saying they're going to raise rates a quarter. Yeah. You're sitting
Chuck is shaking his head. No, I knew you were going to tell me.
I agree with you 100%. I had a conversation with a client yesterday. It's kind of a what do you think kind of conversation. And I'm like, this is a good friend. It's like, this is ridiculousness. It's like, and here's my favorite part. So there's a news story that came out, and it basically said we are at a critical juncture in the economy. Okay, well, their definition of critical is completely different than my definition. We have some decisions and we need some more information to figure things out, but I don't call where we are today critical.
Well, what are the details in that story, not your definition, but in that story, what are the details of critical? What is the definition of we are at a critical juncture?
That was the word critical for sure, and I'm pretty sure they said juncture in the economy.
Or what?
Yeah, well, thank you. So, don't take this the wrong way, but not all news stories are well written. So, I wouldn't say it had.
It's only a matter of time.
It wasn't loaded with a lot of good support. But their point was that they're trying to make is what we kind of just said. Are we going to start raising rates? Do we have to start raising rates? Is the economy too hot? Is inflation starting to perk up again? Or are we just kind of in a lull in the action and we're going to go back to the trend and we will start to see some rate decreases and things like that? So they consider that point where we're at as critical. And there's a little bit of sensationalism going on. I'll give you another example. Someone wrote that interest rates, they didn't say dove, but they used another word. That basically, they're saying interest rates declined, okay? But they made it sound like they declined a lot Well, they went from 4.66 down to 4.66 down to 4.62. So interest rates dropped a whole 400ths of a percent. And I'm like, why do they say this stuff? I mean, because it gets, if you're not paying close attention and maybe you're just reading the headlines, it stirs something up in you, right? There's something I need to do? We're at a critical juncture in the economy right now. Is there something I should do? Guess what? The phone starts ringing. Hey, what do you think? What are we doing? How are we set for this? And things like that. It's like, it's no different today than it was a month ago. It's still, So, I'm up on my soapbox a little bit today. Sorry about that.
You know what? And you promised you weren't going to do that today.
Yeah, here I am.
That's okay. I mean, that's what this is all about, and the people need to hear that. And they need to hear. I think one of the great pieces of taking stock with Art Jarvis is it is a soapbox, or it's a platform for you to reveal to listeners and people who want to learn something more or understand better something that they feel that they do know something about, which is our economy or their personal investment or their personal finances.
Right.
So don't apologize, which not that you are, but don't apologize for climbing up on a soapbox. This is your passion. This is what you've done for a living, and you better share it with passion.
It just stirs a pot that, in my opinion, doesn't need to be stirred.
Okay.
Okay. Now, somewhere down along the line, it needs to be stirred. Okay. But it's a gradual stirring, right? As I've talked about before, the economy is a great big super tanker out in the middle of the ocean. It takes forever for it to turn, right? It's not a little jet ski doing 180s. So it takes time for things to happen, but you get these stories and you get information, and it just makes it sound like something's about to happen. It's imminent. It's going to happen right now, right? And it's just, that's not how it. Unless you have a pandemic and someone walks into the world room and turns the switch off, that's a different story. But thank goodness that only happens every 100 years or so. But there was one other. Oh goodness. Oh well, skip that part. It'll come back to me.
Well, I'm guessing one other analogy that was coming.
It was one other analogy, and honest, it skipped my mind, so I apologize for that.
But, well, I was thinking, because I get to see. Well, go ahead.
So I remember. So we talked about we're at a critical juncture. Okay, sure. If you want to ask me when the last time we were at a critical juncture, we were at a critical juncture in the third and fourth quarter of 2021. And in this guy's humble opinion, the Fed should have started raising interest rates back in 2021. In my opinion, they were easily 6 to 9 months late in starting to take the foot off the gas. Because up to that point, we pumped $6 or $7 trillion in the market. Their foot's mashed on the accelerator, and we're going full bore. Somewhere along the line, you have to make a decision before inflation shows up, and we've talked about this before. I think the Fed did a very poor job of managing inflation on the front end. Okay, so that to me is critical, because look what it's done to us here the next 3 years. 2022 we're down 22% because all of a sudden we have 9 or 10% inflation. And then 2023 we're all we talked about. All we talked about for 3 or 4 years was how the impending recession. Okay. Right. Well, guess what? Here we are in 2024. There's not a recession, coming at us or anything like that. So yeah. Once again, I've jumped up on the next level of my soapbox. But that to me is what I would consider something critical. You have to make decisions that are going to impact the coming years. The decision today. Whether it's nothing or tomorrow. I'm sorry. If they're going to raise rates a quarter, they're going to leave rates alone. They're going to drop rates a quarter. That's not critical. That's not going to have a huge impact on what we're looking at for the coming years.
I'm going to put you on the spot.
Okay.
Where did you see this story?
Yeah.
There's a reason I'm asking that, and if you don't recall specifically, because I know you're going through a lot of different sources during the course of any given day as to what's happening with the economy and investments and stuff. But do you recall where you saw that that headline, that story that said we're at a critical juncture?
Not exactly, but if I was a betting man, it was probably CNBC.
Okay.
Yeah, it'd be either CNBC, I look at BBC, I look at Bloomberg, just trying to catch some of the news line that's coming across, and that one caught my eye.
Well, and the point of the question is, what is the source of the information? Which you always have to weigh that, but especially today, and I'm leaning to something here on purpose. So social media, that was, you say CNBC, so you weren't reading it where somebody put something out there on a social media site. You were looking at a legitimate media site.
The site was legitimate, yes.
Well, network television is supposed to be considered.
Yeah.
That's not social media. That's media, as it was known before we had anything called Facebook or Instagram or now X, formerly Twitter.
Yeah.
And my point is this. So I just was thinking summer doldrums,
Yeah.
However, and you said there are some summers that, there exciting things happen. Are we setting up for, at least as the summer doldrums begin to subside and it gets back into the business, things percolating back up because of politics this year, because November's an election. So is it going to be a May, June, July, and then August percolates, or is it going to, because of politics? And then the other piece of that is, so I saw something yesterday that's out there on social media. I wasn't watching CNBC or any other media source on television or the radio. I saw something on the social media yesterday, and it was absolutely political.
Yeah.
But it cited what the numbers were, say 2020.
I saw the same thing.
Go ahead. What did it say? It was 18. It was 19,000.
19,000,
and we're at 38,000 or 39,000.
Yeah. Well, isn't that
so it's doubled, and so we are way better off 4 years later.
Yeah. See, you're going to take me down a road. I
thought
about responding to that, and I was like, nope, not going to do it.
You know what happened to it on my? Did
it get a response?
No, there's a little X in the upper right-hand corner. You can remove things. You don't have to unfriend somebody.
Okay, yeah.
You don't have to respond and start a fight with somebody who would otherwise maybe be a social friend. Mm-hmm. You can just hit the X and remove it. It's deleted from my feed because what's the source of that?
Right.
Nobody. It's just social media, and Joe Blow created this graphic illustration of the economy, the market. Do you remember what they said it was? Was it like they said the Dow Jones closed at?
Yeah, the Dow Jones. They were saying whatever it was 3 years ago was at 19,000, and now today it's at 38 or
right.
Whatever.
So we are better off.
Mm-hmm.
And people need to understand this. I'm on my soapbox now, Art.
Yeah, no.
But it's still, this has to do with the economy. This has to do with what we're talking about on taking stock. But it also has to do with the impact of politics and certainly the impact of social media. So people are responding to these things, and it's purely political. They need to understand that there is somebody creating these things, and it is. Yeah. Do you remember the lessons in school, listeners? Art Jarvis, Chuck Gibson, do you remember the lessons in school where we learned what stereotype is, what propaganda is, and so on and so forth down the road? Yep. Propaganda.
Yep. Yeah. Know your source.
Propaganda influences the marketplace. Yeah. Getting back to the point of taking stock. So, does Art Jarvis expect that maybe the summer doldrums might be a shorter version of summer doldrums this year because it's a presidential election year?
Either that, or as we get back into that, you want an impact, right? So if we go from a political standpoint, and they're going to do something to influence people's opinions and things, I would wait until they're back from vacation. So. Still put it in. You want them to pay attention, right? Because, if I'm sitting on the beach watching the waves, I'm reading a lot less stories, right? So I'm paying a lot less attention. So, yeah, if I was them, that's what I would want. But you're making a great point. So, if all of a sudden there's a rate decrease, that would raise the hair on the back of my neck a little bit, because I just 100% don't think they need to do anything at this time.
Well, that's the answer.
And most certainly not a rate decrease.
That's the answer to the question that I have let go unasked over the last couple of minutes as we've talked about it, because that was the next question, which is, what do you think? As you said, people are speculating, and everybody's trying to figure out what they're going to do, and even some ridiculousness, as you said, of the idea there might be a rate decrease on May 1st when they meet. And Chuck was shaking his head, no, I don't think so.
Yeah.
Not from what I've learned, as we talk bi-weekly, typically with the Taking Stock episodes. I don't see that happening. Right. Clearly, you don't see that happening. Yeah. But the other question was going to be, what about a rate increase? And you're saying, at least you think,
right.
If you were the man in charge tomorrow, you'd be weighing heavily in favor of we're not going to do anything.
There's not enough data points. Okay, again, I will beat this drum till the day I die. You got to pay attention to the numbers. Okay, and you got to keep the numbers pure. Okay,
sure.
Don't mess with them. Okay, that's the beautiful part about statistics, right? You can give me all the numbers you want. I can make them say basically what I want them to say, right? And I learned that lesson very much the hard way just a few years ago. Okay, you can take some numbers that are just facts and make them say whatever you want them to say, right? So it's true here too. That's the same thing. So I don't do any of my financial analysis using anything that's on Facebook. Let's put it that way. So, but it's social media and the election and all these things. You're trying to influence people, and so you bring up that one, and I'll mention one of them real quick. There's also another one, basically the same day. And their point was, if you put 1 penny in a jar every day for 365 days, you end up with $365,000. And I went, what?
1 penny a day.
Yeah.
For 365 days.
Uh-huh. Yeah.
1 penny a day.
Uh-huh.
Not 1 penny for each day.
Right. Exactly.
No, you don't.
No, you end up with $3.65.
You got 365 pennies.
So
who's doing that math?
So someone shared that, right? And they just shared it. They weren't paying attention, right? But then people jumped all over it, and it's like, here you go. Here's social media, right? Some guy just told you you're going to have $365,000. Well, really, it's only $365. There are a few zeros short. Okay, but so that's social media, right? You just got to watch what you got to. After 37, 38 years, you have to figure out what it is you should pay attention to, and pay attention to it, and try not to get swayed from what you're trying to accomplish, right? And yeah, again, statistics. You can make them say whatever you want them to say. And I can sit here and I can say, "Hey, Chuck, I think the market's going to do great," and I'm going to give you 12 reasons why I think the market's going to do great. I can also sit here and give you 12 reasons why I don't think the market's going to do great. Right? I have to make a decision on what I think's important at this moment in time. Right.
Right.
So,
well, one of the things that's interesting as I sit here, and watch you as we talk about this too. So I get that advantage of seeing expressions in your face, some of which one of these days we should do this in front of a camera and let everybody see the whole thing. But the facial expressions give away, your frustration with when there's the ridiculousness. People can figure that out. When Art says ridiculousness, there's an expression that goes with it.
Right.
When we're laughing, that laugh can be, we think it was funny and it was joyous, and other times it's like, are you kidding me?
Yeah.
And you can figure out what those expressions are. But here, I'm trying to get to a question, right? So it's my job after all.
Right, there you go.
You studied this, and then you've practiced it. And if I were to ask you, during college years, when you were studying this, or whatever, I'll just state, college studies, toward the degree and then toward the licensing and I guess there's licensing that go with what you do.
Yeah.
I don't know all of that. But while you were studying and preparing and getting those licenses, you learned. Do you feel like it was then, like those light bulbs went on and you said, you know what, these are the numbers and this is what I have to pay attention to. Mm-hmm. And I'm sure the next part of the question is, or is it, once you got that and got into the field, then that's when you really learned, okay, these are the numbers, and this is what I have to pay attention to, and this is what's going to guide me in my decision-making to guide clients on the path to success in terms of their personal finance, their family finance, their investment, their retirement plans. So is it more, you got a foundation from the education.
Exactly, very much so.
But it's the practice.
It's very much the practice, yeah. I had some fantastic professors. I was at Ohio State. I was at University of Findlay up in Findlay.
Are you allowed
Ohio.
to say Ohio State when you're talking
The
about
Ohio
the show?
State, I'm sorry. And
okay, I'm just going to let that go.
Right.
Go ahead.
We're going to keep this professional. But, it's... Geez, Pete, where were we? No, but
you had fantastic professors and their foundation
Xavier,
of education.
Yeah, I got my master's at Xavier. Okay, so they were professors that they made you think. Okay,
good.
So it was good. So you walk out and 100%. I know if interest rates go up, that means prices go down. It's there's a foundation there of things that are true and will continue to be true. Right? It's not going to change. So, but the smart aleck in me with talking to my kids is, go to school, get your degree, and then I'll teach you how to really invest. So, that's the smart aleck in me, right? That
leads to that part of the question, and that really is the answer, isn't it? It's, get a foundation and an understanding, but then go practice it, and that's where the real world practice.
Yeah, I've learned things from doing things the right way. I've learned things from doing things the wrong way. I've learned things from other people doing it the right way and other people doing it the wrong way. And I've taken those experiences and has created who I am today from an investment advisor standpoint, right?
Right.
So it's, and it didn't, there's no one flicking the switch off and on. It's a process, right? And just definitely the first 5 to even maybe 10 years, I was definitely trying to figure out what I believed. Okay. Sure. Now, 37 years into it, it's almost a gut reaction.
Sure.
It's just, I still plug my numbers into my spreadsheet.
It's second nature. You see it, this is it, and there's that gut reaction says, I've seen this, I've done this, I know it, and this is how I will respond, and this is how my clients should react and respond. This is what we should do for them.
Right. And guess when that didn't work?
2008. I don't know.
No, 2008 worked great. Looked like a genius.
Excellent.
I always use it in baseball. You want base hit, base hit, base hit. Every once in a while you get a double. 2008, 2009 was my home run years because of what happened, the way we reacted to it. 2020, every number you looked at just looked bad, and it looked like, it was way worse than 2008. Yeah. And so my reaction to that and going conservative, but then it V-shaped bounced off the bottom and took off, and that didn't serve me very well. But that's 1 year out of 37, so I'll take that.
Well, we're going to close episode 24 of Taking Stock with this question.
Okay.
I'm sitting you down at a table with 4 others just like you. So there's 5 of you.
Scary.
Doing the job that you do. It's not 5 Art Jarvises, but there's 5 people, including Art Jarvis, that do what you do right now.
Yep.
And if you all sit down, because you've got some, experience and opinions about what should happen. So if we've set 5 of you down, how many of the other 4 are going to agree with you on, let's do nothing tomorrow? Mm-hmm. And, let's just leave it at that one. How many are going to agree with you, let's do nothing tomorrow?
I would say 3 out of the 5 would agree with me.
Yeah.
one would say we should raise rates, and one should say we should lower rates. I mean, it's a guess.
Well, it's a question for you to speculate.
If you're looking at the news stories and things like that right now, I talked with the client yesterday, and I'll say it again. I would be dumbfounded if we did anything with interest rates tomorrow.
And on that note, we will close Taking Stock, episode number 24, on April the 30th, one day before the Feds meet. When we get together again, approximately May the 13th or 14th, whatever that Tuesday is, we'll find out.
Yeah, we'll have some answers, won't we?
We will.
And we'll have some new numbers, which is the important part.
Well, Art, thank you again for sharing your insights with us, with the listeners, and some of the fun stories, too. Getting to know Art Jarvis, not just the numbers, a little bit today. So
I'll pick up my soapbox and take it home.
Fair enough. Well, thank you again. It was a pleasure. Today was a treat.
Yeah, thank you, Chuck, as always. Appreciate you.
Until next time. Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.